People don't realize how slow the economy moves. So when you see signs, you see a report come out, first of all, that report is talking about the past already. That's not talking about today. So the new report that's talking about today won't come out for another month at least. So we're always in a much slower moving train than people realize.
All right, Mike. So economists have been on a consumer slump watch over the last couple months, right? They're looking at Amazon and Home Depot and having a slump in their retail sales over the last few months. But then you have a report from Walmart where there's a big or higher than expected earnings report from them. We want to read between the lines. We're always looking at how do you interpret these headlines? Is this a go out and buy Amazon or Home Depot stock while it's down? Is it lean on Walmart a little bit more? What does this mean for the average consumer as they're seeing conflicting reports from these massive companies?
Yeah, I think a lot of people would assume that Amazon, Walmart, and Home Depot, they'd kind of lump them in a similar category. But really, if you look at, say, your personal life, they're very different categories. You're not going to Walmart or Home Depot or necessarily Amazon for the same type of items. Just as an example, Walmart said that one of the best growth areas they had was their grocery division. That grocery continues to be strong. Well, you're not going to Home Depot for groceries. So if Walmart is showing growth, but it's based on grocery sales, that may not be comparable. And you got to look at too is where do you spend discretionary money versus essential money? So groceries have to be purchased. And if Walmart is growing their grocery division, that makes you think that maybe the consumer is not going to the local grocer anymore. They're going for a price smart alternative and they're going to Walmart. And then vice versa, if Home Depot is not doing well, but groceries are going well, does that mean people are pulling back discretionary spending, say painting a bedroom, remodeling a house, because they have to put their money into groceries right now because they don't have that extra money to go do these extra things? So it's really trying to use all these different articles and headlines and trying to put it all together to make sense of what is actually going on and then apply it to our own situation to say how the headline portrays it. Is that what it actually looks like in my life, or is there something different going on here?
Yeah, and I think that correlates too to where people are investing. Right? I think a lot of people invest into companies that they're familiar with. They might invest in Apple because their family uses iPhones and iPads, right? They might invest in Walmart because that's where they get their groceries. And so not only is their investing habits align with, their daily habits, but to your point, they need to be reading headlines and understanding, okay, if one big company that I find value in or that I use has reports that are not favorable or what we thought they were, is that the end all be all to our economy? Should I be panicking? Should I be looking at my investments? Should I be looking at my monthly budget even to understand, hey, maybe I need to tweak a little bit what I'm doing? From what I'm hearing from you, that's not necessarily the case. You need to look holistically. Don't focus in on one company and what it is that they offer, because groceries are not the same as a gallon of paint.
Well, the whole purpose too is, to really get an aspect of where is the economy going? Because whether Home Depot does well or Walmart does well, if we don't own that stock, maybe it doesn't necessarily apply to us, but these are where everyday Americans are shopping. So when they put out a earnings report and they say, this is what's doing well, this is what's not doing well, and this is what we see going forward, you look at that and say, this is kind of a snapshot of America economy, because Amazon, Home Depot, Walmart are across the United States. So we can start to put together the pieces of, is the economy doing well? Is it neutral? Or do I see a downward slope coming in the future? And then base our investing decisions, base our purchase decisions as far as if we're going to, for us, are we going to go buy a new apartment complex? Or do we see a slowdown coming where we want to wait a little bit? Or do we think it's going to take off, so we want to get in before prices climb? You're kind of using all of these different articles to understand what does the future look like, so we can make the best decision based on probabilities to say, most likely this is what's coming over the next few months or the next year.
Yeah. Put yourself in the average consumer's mindset right now, even if they haven't looked at some of these reports that we've been reading this morning. Where's their mindset now as it does come to monthly spending? To your point, to go out and buy groceries. I mean, you and I combined, we have 10 kids together between our two separate families. Our grocery bills are not small, right? And we've felt that, especially over the last year or so. Other people might be in that same boat. And then there's also the discretionary spending of, hey, I do want to paint my kid's bedroom. We wanted to add on that sunroom to our house. Some of the things that Home Depot might be on. Where do you see the mindset of consumers right now, irregardless of what the reports are saying of here's what June looked like, here's what July looked like? Where do you see consumer spending leaning towards right now, as we get near the end of the summer?
Well, I mean, all of the reports show that consumers are starting to spend more on essentials and less on discretionary money, which would make you think that there's just less money to go around then at the end of the month. So when you have your budget, you have so much money available. If you're going down to zero, the reality is you're just not going to do that remodel this year because you just can't afford it. You can't afford to go buy paint for the bedroom. You're not going to add that project. You're just going to focus on the essentials right now. So that seems to be kind of where this is heading, which would basically say that wages are not quite keeping up with inflation yet. We're still behind the economy. I'm not saying it's crashing, but it's slowing down and it's getting a little sluggish as people start to shift from discretionary to essential items. For us, the reason we really want to understand the consumer is A, the stock market. Where are we investing? What does the future look like? But we want to know, are interest rates likely to go up or go down? We also want to know, are our tenants likely to have enough money going forward? Or are they getting squeezed where once you start shopping at Walmart for groceries, when you used to shop somewhere else, once you stop buying at Home Depot and now you're starting to cut back, next up in line potentially is car payments and rent payments, which for us is a big deal because as that consumer gets squeezed more and more, that means it's more risky for us in all the investing that we do.
Yeah. How does shifts in the stock market, how does the potential interest rate reduction, coming in December or in September, fingers crossed, right? How does that impact just the general spending of the consumer if some of those factors?
This is really what we've been talking about, when bad news is good news or when bad news becomes bad news. So everybody's looking for the interest rate cut because we all want to pay lower interest rates. But the interest rate cut only comes when the economy is slowing down so much that it's necessary to drop the rates. So it's very hard to balance that teeter-totter perfectly where the economy doesn't slow so much that you need to cut rates, but you cut rates just to kind of keep it level. And I think we're probably within that range right now. You can see the earnings. Now they're talking about past months and they're showing weakness in those past months, showing money going from discretionary to essential spending. That means the economy is slowing. So now we need to cut rates. It's just a matter of time will tell. Did we cut rates soon enough that we can balance this and ride this out? Or is the spending behavior and the slowdown in the economy so strong that now we're really trying to stop this ball rolling downhill being the economy, that all of a sudden maybe it went over the hill, and as it's starting to roll down, we're trying to lower rates to try to stop that as quick as we can. Only time will tell, but it's definitely showing signs of a slowing down economy. They're going to lower rates because, it's showing almost guaranteed certainty that they're going to lower in September now, and we'll see. We'll see if lowering it brings things back up, levels it off, or if we got to keep lowering to try to stop that ball rolling down the hill.
Yeah, at the consumer level, I think this really just shows the power that each consumer has, but it is a fine line, right? There is that fine line of how tight do people have to squeeze from a budget standpoint for how many months, with the interest rates that they're at, because people are looking at it to say, kind of to your point, they look at the interest rates and they say, okay, when interest rates drop, I'm going to take this action. Well, even if interest rates drop and lending and financing gets a little bit better, people still have been in that pinch. They've felt a little squeeze for the last few months. So now the next few months might be just them recovering. Maybe it maintains and says, hey, we're not going to go out and all of a sudden completely change our spending habits September to December because now interest rates are down. We're still recovering from April to July, right? Where we were squeezed tight. And so I think that's where the macro economy and the micro economy kind of are at odds with each other. And the macro economists don't really look at that. They're just like, oh yeah, once interest rates drop, spending will go back and we'll balance out. It's like, well, no, there's a recovery point. Would you agree with that? Or is my logic off there?
No, your logic is spot on, and people don't realize how slow the economy moves. So when you see signs, you see a report come out, first of all, that report is talking about the past already. That's not talking about today. So the new report that's talking about today won't come out for another month at least. So we're always in a much slower moving train than people realize. And that's the other thing is, as we have that recovery period, that means that the slowdown in the economy is going to be longer than we realize. However, that's the same reason that the slowdown took longer than expected, is because the brain and the psychology of the consumer previously, even though rates rose, people had a spending habit that was built in. And it wasn't until months into this, almost a year now, that people's behaviors finally start to change, even though the interest rates rose quite a while ago. So everything just moves very slowly. It doesn't happen in a matter of moments. So when the rate cut comes, it's not going to change things tomorrow. Now we have to change, like you said, that that behavior of cutting back, now you have to get back into okay, I'm not cutting back anymore, I'm going to spend again. And this takes months to change the psychology of the consumer. I am super excited to introduce to you the Doctors and Dollars 5-Day Financial Challenge. I'm Mike Neubauer, I'm CEO of Grand Vision Companies, and I'm the one that you see on the Wealth Wednesday and Daily Dollar episodes with Nate. So Nate and I are partnering again to do something even more exciting, which is the 5-Day Challenge. We're taking the best of all of our episodes, all of our expertise and knowledge, and we're condensing it into an impactful and purposeful 5-day presentation, 1 hour per day, for 5 days, to give you everything you need to build that foundation for your financial future. So if you're looking to gain the pieces, you want those puzzle pieces and find out how they fit in your financial plan, head over to the Doctors and Dollars website, join us on the 5-Day Challenge. We're putting it together for free, so you got nothing to lose. We look forward to seeing you on the inside.
Not only that, you made a great point earlier, like just because rates drop, let's say they drop in September, that doesn't mean that everyone's getting a raise or that the value of the dollar, each person's dollar means more, right? So like everyone's still going to be making the same realistically. Like your buying power increases a little bit with rates down, but like you're still in that pinch. And I think that's an excellent point you made, is like the recovery is going to be slow. People can't expect that everything's just going to turn around by Q4. I mean, you're looking at probably Q2 of next year when we really we start to see those headlines of like, oh, we're bouncing back and we're so glad that the Fed's dropped rates. They'll drop them, let's say in September. They may do it again in December. It's going to take time. And I think that's where both consumers are a little jaded and thinking that they're waiting for those great headlines of, oh, finally the economy's getting back to where it was. But I also think that economists and people that are really watching the psychology of the consumer, I think they're a little jaded and thinking like, oh yeah, these 2 or 3 markers or events that are going to be happening soon, that's going to change everything. We're going to be able to speak highly of our economy, come January of next year. And I just don't think that's the case.
Yeah, I mean, realistically, the bad news is just starting to come out now. It may still be this time next year, and we're just starting to get out of these headlines and switching to good news. We don't know how quickly that's going to happen. The reality is there will be cycles. It will always be up and down. We want to try to predict, but we can't. All we know is at some point that will happen. So it could be Q2 of next year. We start seeing these headlines of a failing economy, slowing down economy. They could start fading away, or we could be just at the bottom of that valley and just starting to tick back up. We really don't know. We do know that it will be always a teeter-totter, and we're always going to be kind of going through these cycles. But the good thing is to stay at front of it and know, because otherwise you're always going to be behind the 8 ball. If you're reacting to headlines, you're reacting too late. You need to almost expect and understand what the headlines will be. And the only way to do that is to pay attention today to start to make probability predictions for the future.
Yep. I'm going to ask the question that I think every listener probably has in their mind right now. They're saying, okay, Mike, we shouldn't be looking at specific companies and their performance because it's all based on discretionary versus essential income, what it is that that company is providing as a good or service. I shouldn't be looking at the headlines that are today saying everything's, not so great, because that's looking in the past, and I should be making probabilities about the future. I think the big question that everyone's going to be asking of you is, what headlines should I be looking for, and how do I read between the lines on what the bad headlines are saying?
You have to be looking at all of the headlines, because to put the whole puzzle together, you need all these different pieces. So the same earnings report could be published by CNBC, could be published by Bloomberg, could be published by Forbes, and they'll all have a different perspective. So even the same report, you almost have to look at different sources to see if there was anything that was missed. You also, which most people would not, but you could actually watch the earnings report and review their report that they put out as well. But you want to take all of this as earnings season right now. So if you're looking at, say, 3 sources for Home Depot, you really need to look at 3 sources for Walmart, 3 sources for Amazon. You need to be looking at the Fed rate cuts. That's why we put this podcast out to everybody, because we are always paying attention. And the reality is most people just don't have the time to sit and read every episode. So our goal is to try to provide the most unbiased, just overall perspective and view, so that you can have one source to kind of put all this together. But the reality is you really need to read multiple headlines. You have to have multiple pieces of the economic puzzle to be able to start to put together your probabilities and project for the future where you think things are going. And at the end of the day, for most people, they're just putting into their 401k. It won't have a big impact because they're not going to be buying and selling on a regular basis in their 401k. But for the people that are looking to kind of get to that next level, trying to get above that kind of basic investing, this is where you start. You start to gain the experience and kind of understand how the economic factors work in the world, what makes one thing happen versus what causes this to go up or down. So you start putting this puzzle together, and that's kind of that first foundation piece when you're stepping up to understand how things are working so you can kind of do more of an advanced level of investing. If that's where somebody is, it's really just to start to gain that muscle, to start to like hit that economic gym to say, all right, I understand what's going on. When I read this article, I have an understanding now. It's not all over my head like it was 3 months ago. And then as you start to understand more, you start to make some moves based on the probabilities that you expect. And then you find out, was I right or was I wrong? And then if you were right, you start to learn a little more. If you were wrong, you learn, well, I misjudged something here. What did I misjudge? And you start to perfect it. And as the months go by, as the years go by, you kind of are growing from that beginner investor into kind of that next level of understanding, what do I do with my money? How do I get a leg up on just everybody else that's just putting into their 401k?
Yeah, and that's where I think our Doctors and Dollars 5-day financial challenge is critical. It really is that educational piece and really taking those first steps. I mean, day 5 of that challenge is titled From Basic to Advanced. It's really understanding what are the pieces that wealthy are out there doing that took them from the basic to the advanced, and how can I do that in my own financial planning? And I think that's critical. I don't think you or I expect anybody who does that challenge to go out and read 3 articles from Bloomberg about Walmart or Home Depot or anything like that to really understand the economy, because those are very micro level type understandings. But I think just having a basic understanding of how consumer reports and how the jobs report and inflation and market rates, how that affects them from a macro level, I think is super important. And if people don't have that time, that's where they lean on episodes of the Daily Dollar to get that quick hit and understanding. But I think just to get that baseline start of, hey, I don't think a lot of these big macro level things affect me much because I'm putting money in my 401k. I think that's why it's really important, take that 5-day challenge, which is at doctorsanddollars.co. Take the 5-day challenge and just get that baseline knowledge and understand what are the things that I should be doing.
Yeah. And I mean, the problem is that a lot of people will do is they'll watch something like a report on Walmart and a report on Home Depot, and maybe they own both stocks. They'll sell Home Depot because it's going down. They'll buy Walmart. But that doesn't mean anything. The earnings report doesn't mean that one's going up or one's going down. It's just a piece of the overall puzzle. And that's why individual stocks are so difficult. And that's why reading just one article doesn't give you enough of the full picture to understand what's going on. So it's important to use these for the tools that they are, but not to make an investment decision based on just one report, or I'm buying Home Depot because it's down. That means it's got to go up in the future. That's just not quite how it works. One thing that I will say as a consumer, if you do have the cash, you may start to see some things go on sale at Home Depot, because when demand falls, they have that same supply, but demand is falling. They need to clear that inventory. They need to keep sales up. So you may see some unique sales. You may see some things that were more expensive than they used to be drop down in price. So if you are looking to remodel and you have that extra cash, when the market is booming and everything's out of stock, that's not when you want to be doing these projects. You want to do them when everything is filling the shelves and they have to reduce it to get it off the shelves. That's when you want to be opposite of the traditional consumer. So even if you're not buying and selling individual stocks, you're just looking for a deal, you can use these reports to understand Home Depot will likely have some deals that they did not have 3 months ago coming up in the future.
Yeah, I mean, a big rule in the stock market when it comes to buying and selling is buy low, sell high, right? Same can be said for Home Depot. Buy low, just wait, have some patience. Something's going to go on sale and scoop it up when you can. Even if you aren't trying to remodel tomorrow, maybe it's like you and your wife or you and your spouse have talked about it. Buy it now when it goes on sale at Home Depot, and then do it when the timing's right for you.
Yeah, I mean, so to kind of wrap it up, the reality is we have very similar businesses that are reporting earnings. They have different types of reports, which would think that maybe this is saying differing factors within the economy. One's doing well, one's not doing well. But if we can read between the lines, we can see that the fact that, let's say, Home Depot is not doing as well may also be in part the reason that Walmart is doing well. So it doesn't necessarily mean that one report is saying what's happening in the economy. Both of them together is giving us a bit of a lens to the economy. And the most important thing to learn from it is this is just one piece of the puzzle. So as we watch these headlines, we'll watch tomorrow and see, is there anything else that pops up? We'll see if the rates get cut in September. We'll see what the CPI numbers continue to come at, where the inflation has been trending down. So you just kind of keep an eye, and you're just always looking to keep track of the trend. You're trying to see, are we rising or are we starting to fall? And we're not looking to say, are we rising tomorrow or are we going to drop off a cliff tomorrow? We're just looking to keep our finger on the pulse to say, are we going in a good direction? Are we starting to go down? Does it seem like we're staying neutral? And as we gain more data, we start to kind of reflect, and it probably looks kind of like a wave like this, but over a long period of time, it'll either be up, flat, or it'll be down. And we're just trying to get a feel for, what does the next 3 months, the next 6 months look like? Does it look like better, worse, or same as it is?
Absolutely. Good final thought there. Keep tuning into our Daily Dollars. We will continue to read between the lines of these headlines, cut out the BS, and give you I'd call it the agnostic look at what's going on in today's world. Talk to you later, Mike.
See you, man.